Hi, welcome back to the $1 Million Podcast. I'm Dr. Bobby Stanley.
And I'm Dr. Phil Shaheen.
Today, we want to talk with you guys about profit. Profit in your dental office. Dr. Shaheen, in my opinion, is a very valuable expert in that arena, and he has some great information to share. He and I were discussing about how to understand profit in the dental office. And Dr. Shaheen, you were saying things like, it's important to understand overhead and to understand the profit margins of each procedures and to understand your break-even point. Can you start just with the basic what profit and overhead is?
So let me get down to the basic things. I'm not an accountant, okay? So I'm not going to talk like an accountant.
Okay.
I'm going to use very complicated words, but those are just words that I want every dentist, to know. I define profits with what's left over after you paid all your bills. If you're a solo practitioner, you agree that your salary and your profits are the same. It's what you keep after you've paid all the bills, okay? If you have a larger practice, it's a little bit different. We'll talk about that later. But what we fail to understand is profit comes after you've paid all your bills. So the first dollar you collect in your month actually has zero profit. The second dollar has zero profit. Even the $100 and the first $1,000 has zero profit because those are all monies that are already spoken for. You have to pay the rent. You have to pay your team. You have to pay your supplies. You have to pay the lab. So the word profit sometimes is misused when you do a crown and somebody comes up to him and is like, oh yeah, I make great profit on my crowns. Well, wait a minute. It's not true. You make a great profit margin on your crown. But that profit margin is this virtual temporary profit you make on that procedure. But it doesn't necessarily mean that your practice or business as a whole is profitable.
I think that's important. Dentists don't understand that concept at all because they see what they're producing every day. They see the money coming in, and they don't understand that there's always going to be an overhead, and that's your expenses, and the expenses have to be paid regardless. So understanding profit margin and understanding profit are two different things. I think it's important. I'll let you continue.
Yeah. Well, we have, I think we're in the best profession ever because we have something called a cash flow business. A cash flow business means there's always money coming in. The problem with a cash flow business is if you don't plan ahead for the expenses that are going to come 30, 60, or 90 days in the future, you can get hurt very easily.
So that's, for instance, I had a great month. I did so many smile makeovers. Everything's great. I'm going to deliver them all. And so I got lots of money from my smile makeovers, and the month is so profitable for me. And then next month, I'm doing more deliveries than smile makeovers, and oh my God, the lab bills just showed up. Mm-hmm. So we have to look at all of that as a whole.
It's a lot of planning. It's a lot of things. But there's an easy way to plan for those expenses. It's by knowing a few metrics.
Okay, great. Let's talk about metrics.
Oh, I love metrics. I'm a numbers guy. So there's, KPIs are all over the place, right?
So KPIs are?
Key performance indicators.
Great. I love that.
In dentistry, we've been used to hearing these words, and usually they refer to how the practice is doing in terms of production, collections, and things like that.
Yes.
And it's great numbers that you should know. For example, Bobby, I think you should know your average production per hour. You should know your treatment acceptance percentage. You should know things like that because they're very important to help you do better in dentistry.
Yes. So if you know your KPIs, if you know these key performance indicators, you can look at things on a monthly basis or even a quarterly basis and see where you're standing and understand what you need to work on to make sure that your metrics are where your metrics need to be.
Correct. But those are for the clinical part of the dentistry. Nowhere in those KPIs do we ever see the word profitability.
Right.
And there's a number that everybody should know from the top of their head. To me, the most important number is the break-even point. The break-even point is the number that you have to collect every month to pay all the bills. Before you can make $1 of profit, you have to collect a certain amount of money. And how do we calculate all this? Well, that depends on two factors. You need to know your fixed costs, and you need to know your variable costs.
So let's talk about what's in the fixed cost. So we know our rent's going to be our rent every month. So that's
Right.
a fixed cost.
Correct.
Our electricity can be a variable because if we're not in the office very much, then the electricity goes up and down. But that may fall under fixed also.
I would absolutely call it under fixed because you still have to have electricity and you have to pay it or you will
Agreed.
have no electricity and you can't produce zero dentistry.
I totally agree. Tell me some other things that fall
So
under
obviously the
fixed.
utilities, electric, gas, cable, phones, trash removal. I mean, all these things that you need to be able to operate, the water bill, things like that.
So would our labor fall under fixed?
Not really. So in my practice, and everybody can determine for themselves what they consider fixed cost because everybody has a little bit of a different situation. But in general, the way I looked at fixed costs is everything you have to pay or else.
Right.
For example, I consider my equipment loan as a fixed cost because it doesn't matter if I do dentistry or no dentistry with that. That loan is still due on the first of each month.
So fixed cost is, let me make sure I have this correct. Fixed cost is what you have to pay whether the doors are open or not.
Correct. If you choose to go on a 3-week vacation and you close the doors, those bills are still due.
Yes.
You can't tell the landlord, well, I'm taking 3 weeks off, therefore I don't want to pay my rent. It's still due. So all these things, the marketing expenses, that's a fixed cost. Mm-hmm. Because you're not going to stop marketing because you left town. And you're going to pay your marketing regardless if you have 10 new patients this month or 100 new patients.
Okay.
You're still going to pay it. Because if you don't, you're going to have 0 new patients.
Okay.
You have to market.
I think I understand fixed costs.
Excellent. Variable costs, those are the costs that vary depending on the volume of dentistry you do. There's some very obvious one, supplies. It's kind of logical. If you do a lot of dentistry, you're going to spend more on supplies. If you do a lot of crowns, you're going to spend more on your lab. Mm-hmm. If you place a lot of implants, you're going to spend a lot more on implants. So those are all variable costs because if you don't do implants, well, your bill for the implant section is going to go down. Disposable equipment. So there's the hard equipment that is there all the time, like your chair. Once you buy it, you buy it. You're not changing it often. But you do need some supplies like the equipment like iTero sleeves and the disposable that you have. Those vary. If you use a lot of them, it's going to cost you more. And then all the little things that help you run the business, like postage and billing costs and usage, things that you pay per use. Those are all in the variable factors. But there's one very, very important one that we have to put in the variable category. It's the team pay. Mm-hmm. And people sometimes look at me and like, why is the team pay in a variable? Because I have to pay them anyways. Yes and no. If you have a larger practice that requires more team members, your team pay is going to be much higher than if you had a smaller practice or produce less dentistry. So, the team pay is definitely in the variable expense.
And then I know that you incentivize, and so do I in my practice. And so each month varies depending on the incentives that the team earns. And we're going to talk about incentives in another podcast, but I think that would make it variable also.
This will go into a variable expense, correct? Mm-hmm. Because guess what? If you don't hit the metrics that we want, for you, in order for you to get your incentives, the incentive will not kick in.
Right.
But what's interesting is if instead of looking at the number, look at it as a percentage of collection. I have a lot of my colleagues that always say, oh, you give an incentive, but don't they get paid enough? This drives me nuts. I don't understand. I don't understand why you would want and encourage yourself to get more and do more, but you want your staff to never be paid 1 penny extra than what they're... I don't understand that.
Totally agree. Exactly why we incentivize also, and I think it's so important. I think we should spend a whole podcast talking about incentives.
I think we should. I believe that what's best for the practice has to be best for the staff, for the team members, and for myself. Or it's not a a team approach where we're all going in the same direction.
I agree.
Do you know what your team members are going to say? What's in it for me?
Yes.
If I work harder or I don't, I'm getting paid the same amount. Why should I work harder? So definitely, I definitely think that incentivization is extremely important.
Yeah, I'm passionate about that too. Yes. Okay, so that's in our variable.
Yeah.
And then, so we know we have a fixed and we have a variable. And how does all that translate into profit margin?
So there's a formula that we use to calculate, the break-even point. It's a complicated formula, but really what it is, it's the total fixed cost divided by 1 minus the variable cost. Okay. Once you do that, divided by 12, it gives you an X dollar amount per month.
So if I have the fixed cost divided by 1 minus the variable cost divided by 100?
Yeah, it's a percentage. Correct.
A percentage, right.
Yes.
Okay. And then I divide that by 12. So I know my monthly, because
Correct.
12 is my 12 months. Then I know what my break-even point is per month.
Correct.
Okay.
So let's backtrack. You obviously need data. So you can only calculate this when you have at least 1 year worth of data. So let's say you're a practice that does $1 million a year. After 12 months, you can take that P&L and extract the information. You can have your CPA help you. You can direct your CPA to divide the fixed cost and the variable cost and give you those percentages. For example, I'm just taking an example from one of our practices. One of our practices has a fixed cost of 85% and has a variable cost of 14%.
Okay.
Okay? Those are two fixed numbers that we use throughout the year to decide where we stand. Mm-hmm. Now, of course, those costs varies all the time. 2022 and 2023 is the best example. Inflation. Mm-hmm. My numbers are probably going all over the place. So you have to reevaluate them every quarter or every 2 quarters to make sure you have a good number. But once you have those numbers, you can plug it into the formula and it will give you a number. So if you look at the example of 85%, 15%, it might give you something like $78,000, $80,000 a month for you to break even.
Okay, so let me look at this from a numbers perspective. Let's just say it was $1 million practice, and you have 85% is your fixed.
Yep.
So $850,000.
Yep.
Minus 15%, correct? Is that?
The 15% is your variable cost.
That's my variable.
So in the total cost, there might be some so it's not an 85-15. It could be 80-14.
Okay.
It doesn't add up to 100.
Got it.
Because they're two different metrics.
Okay. All right. Excellent.
Yeah. So maybe my example was a little bit incorrect, but in the end, what we want to know is after you hit your break-even point, every dollar you produce or collect, your profit margin on it is so much larger because you know that, let's say your variable cost is 15%, mm-hmm. that extra dollar that you collect yields you 85% profit. But it's a true profit because all the bills are paid.
Because we've already hit that fixed cost.
Correct.
We've already gotten that. And now everything after we get to that fixed cost, 15% of it goes to the bills and the rest is profit.
Correct.
Got it.
On your first dollar, on your first $50,000 of dentistry, 100% of those dollars go to bills. Mm-hmm. And it's when you hit that break-even point, that's where you can make your profit. So the reason it's important is a lot of times I'll talk to some colleagues and then they'll come in and, had a great implant case, or I had this, and that, and I made a killing. I did an X amount in profit. Okay, that's great. How much were your bills? Did you cover all your monthly bills with that one case? And the answer is usually no. And they have a false sense of killing it.
I agree.
When it's not true. Now, if you did 10 or 20 of those, then yes, most likely you have enough money to have paid all the bills. But one case is not going to determine your month. And you just got to be careful because then you feel cash rich, and you forget that there's bills associated with that amount. that comes later.
That's when you can get upside down, and that's a
Absolutely.
bad place to be, because the end of the month comes and you don't have enough money to pay your bills, and you said, but gosh, I have these big cases. How did I not have enough money to pay my bills? And you're feeling the whole time like you've been making tons of money, you've been working really hard, your team's been working really hard, and you still can't make the bills. And it's really not a good place to be. I've been there. I know you've been there. Yeah. And stepping back and working on the business and really figuring these types of things out has helped my life be so much less stressful.
So the most sneaky bill ever is that quarterly tax payment.
Yes.
If you don't remember that January 15th, April 15th, June 15th, and September 15th, you've got a big payment coming, and you just see the money in your account and you just spend it, you're going to get to those dates and you're going to look at your account and your CPA and you're going to say, why didn't you tell me? I really have a feeling if you want to be a good business owner, you have to stop just counting on your CPA to tell you everything.
Oh, I agree.
You need to know these things.
I agree. I'll tell you a funny story. My husband used to say to me, I don't understand. You know these bills are coming every year. You know you have to pay taxes, and you pretty much know how much it's going to be every year. Why are you not prepared for that? And I used to say, I don't know. I don't know, because I'm just looking at what's in the bank. I'm not looking at the real numbers. And I think a lot of dentists do that. I think they look, they see they have money in the bank, and they feel good about it because they know they produce a lot. And you're exactly right. If you don't prepare, if you don't understand the bottom line, if you don't understand how money is coming in, but more importantly, how it's going out, then you're going to have those days where you owe money. Yep. And the money's not there. And that leads to a lot of sleepless nights.
Correct. Cash flow is not profit.
Thank you.
Big difference. You have the cash in the bank, but that's not profit. That's just the cash you generated to pay your bills. And look, we're lucky. We're small business owners, and we generate a lot of cash flow. So eventually, there will be money left over for you, and in terms of salary and profits. But you have to know these numbers. Why is it that I can talk to a colleague and a friend of mine, and they know how much they produced last month, and they know how much they collected, but they never know what their profit margin was on a crown? It's like, how much does a crown cost you? Oh, it's a $100 lab bill. Okay, but that's not your cost. You have more cost to that. You have the cost of the room. You have the cost of your staff member. You have the cost of all these things add up, and it add up when you have to do it over and over and over again, and they lose track of it.
Yeah, I love that. I think it's important that we understand what our profit margin is for each procedure. And I want to go into that with our next podcast, because I know that dentists don't understand it. For many years, I didn't understand it. And it's really important. So thank you.
My pleasure. And we'll talk more.